Good morning, ladies and gentlemen, and welcome to the SYSGROUP full year 21 results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you'd be so kind to give that your attention, we would be most grateful. And I'd now like to hand over to Adam Binks, CEO from SYSGROUP. Good morning, Adam.
Good morning, thanks, Mark. Good morning, everybody, and thanks for joining us for our full year FY21 results presentation via the Investor Meet Company platform once again. My intention this morning is to take you through an introduction to the company for those of you that are new to us, and my apologies for repeating myself to those of you here for the second time. And then we'll take you through a summary between Martin and I of our performance throughout the FY21 period, and more specifically, the period under the pandemic. So just a quick introduction. My name's Adam Binks. I'm the Chief Executive Officer of SYSGROUP. I've been with the business since 2014. I originally joined as Chief Operating Officer and was promoted to Chief Executive back in April 2018, so just over 3 years at the helm of this fantastic business now. I've got a 21-year career in the TMT sector, largely around telecoms and hosting. And Martin joined us on the board as Chief Financial Officer back in July 2018. Again, also with the business for 3 years, where he joined us from NCC Group, where he was Associate Finance Director. And we brought Martin on board to complement my and the rest of the board's M&A experience, given that we are a buy and build company. So look, an introduction to SysGroup. We are a AIM-listed managed IT services and cloud hosting provider. We've posted our results yesterday morning, as you will have seen. So we're run rate 18 million plus at the moment, with 2.9 million of adjusted EBITDA, which I think you'll all agree is a pretty good performance, given the restrictions under which we've faced over the last 12 months. But yeah, look, we're a business that competes largely in the mid-market space, looking after customers with deployment sizes of typically 250, 300 to 1,000 users, and providing services largely in the data center, which I'll talk more about the capabilities as we move through the slides. So we've got 110 team members based across 5 offices around the UK, Liverpool being the headquarters. We've an office in central London. We've opened a brand new office just recently in Manchester, which again, I'll talk more about later, and the rationale for why we've done that. And then we've got our offices in Newport, which we acquired with the Certus Technology Group acquisition back in 2019, and also our office in Telford. So great coverage across the UK for as we ease out of lockdown restrictions once again to be able to service our customer base. We're looking after about 700 plus customers, as I say, in that mid-market to enterprise space within the market. We operate on a 24/7, 365 basis with our UK-based service desk team. And as I always say at the start of these presentations, one of our most important KPIs that we love to report to the city is our 97% plus customer satisfaction. So throughout the period of lockdown, we've managed to retain our plus 97% consistently customer satisfaction. Now, one of the most important things for being a trusted managed IT service provider that clients, prospects, and existing customers look for is our vendor partnerships and our accreditations, which I think this slide spells out quite nicely. You'll see some very big recognized brands there that SysGroup is partnered with, that we work with in order to deliver our solutions by utilizing the technology platforms and software. So for example, we are one of 2 platinum partners in the UK for WatchGuard, which really strengthens our security capabilities and our security offering. And again, you'll see Fortinet and SonicWall on there, again underpinning our security creds. And then coming into our accreditations, really, really important that we can demonstrate to our customers how we secure their data, how we work with their data, and how we look after their data. So accreditations such as Cyber Essentials Plus, ISO 27001, and as I always say, the one I'm most proud of is our PCI DSS Visa Merchant Service Provider Level 1 status, which really demonstrates our capability to secure data and house it in an efficient manner whereby our customers can trust us to look after that data and know it's safe. So just to give you a reminder on the strategy, Martin and I are here to drive this business to become a £100 million market cap company. That remains the strategy. It's unchanged from when we set out on this journey a couple of years ago, despite the pandemic. Albeit, I do believe we've suffered probably a 12-month delay to being able to deliver on that strategy. COVID has slowed us down. We are a buy and build business, and you will note that we've not made an acquisition throughout the lockdown period, and there's many reasons for that, largely because we've not seen the quality of assets come through, as well as the good quality assets have not been coming to market, so as to prevent any real chips on valuation, shall we say, for their own business in what may deem to be a fire sale when selling a business through a difficult time. So it remains our vision to become the leading provider of managed IT services and cloud hosting to businesses in the UK, and we're on track to achieve that vision and that goal as part of our strategy. And we do that purely through our value proposition, which comes through in our people and our solutions and services that we deliver to the market. I think it's really important that I drive out the core values, which you see on this slide that the business operates on. And we ask all of our people to kind of live and breathe the core values of the business. We've got them decorated on all of the walls across the offices. It's people's desktop backgrounds. It's your mouse mat. We've sent them all out throughout lockdown, so we've kind of got those into people's homes. But it's really, really important that business operates to its core values in order to achieve its goals. And by setting out those key fundamentals and having people operate to them is what really helps us drive success. So, I've spoke about them before. I'm not going to go over it. They're listed on the screen there. But we've got a great team of people that absolutely love to live by our core values and work coherently together every day in order to drive SysGroup forward. So in terms of our capabilities, I mentioned last time, we made a couple of acquisitions in 2019 to really expand the portfolio and the service offering. And our main focus when we take solutions into customers and into prospects is all about what we can deliver to them in the data center. So we occupy space at 5 major data centers around the UK. And the building that you see pictured on the right-hand side of the screen there is what is now known as Vantage's CWL1 data center, which used to be Next Generation Data. They were acquired by Vantage in July last year. And that's one of our main points of presence there down in South Wales. As I say, we acquired it we acquired the footprint, not the data center, with the Certus Technology Group acquisition. We occupy about 100 racks of data space in that facility. And it really is a world-class, fantastic facility that when we show it to prospects and to customers, they can see the kind of facility that it is and really know that their data is safe and housed in an environment that is absolutely ideal for running technology in the cloud. So our core service offering is our SysGroup platform, very similar to an Azure or an Amazon in terms of its scalability and its flexibility to host complex workloads and make those available for our customers and the teams of our customers to be able to access data remotely and in always on 24/7, 365 uptime basis. But one of the key benefits to us being located in the CWL1 facility is it's where Microsoft also houses the UK Azure presence. And you know, sure, many of you will have heard one of the hot topics right now, and has been for some time and will continue to be, is hybrid cloud. So SysGroup is a specialist in providing solutions that operate in a hybrid fashion. So we can plug in on-prem infrastructure into the data center, as well as being able to connect to the public cloud services such as Microsoft Azure and Amazon's AWS service. But with the Azure capability, we can connect really, really easily through an internal interconnect within the same building, which really reduces network latency and makes the communication between hybrid platforms almost instantaneous because there's no public networks to transverse in order for that data to be shared. And then coming back to our SysGroup platform and the rest of the data centers, so that platform is built on a scalable architecture across 3 core locations, being in Manchester, London, and Newport in South Wales. And we can operate workloads for our customers from any of those facilities, and they can build what we call virtual data centers and have services operating in each of the 3 locations should they wish to bring it as close as possible to the end user connectivity, which I'll talk more about on the next slide. But we really have that great geographical coverage and a 10 gigabits per second fiber network that connects it all up to make the access to data real time. So if I come on to the network capability that SysGroup has, we obviously acquired Hub Network Services back in 2019, which again expanded our national footprint in terms of our physical connectivity reach. So again, it's concentrated on 3 core locations to give us that geographical diversity across Manchester, London, and again, Newport in South Wales. And then in each of those locations, you'll see from the right-hand side, the nice, colourful, big, long list of names there is all of the different tier 1 and tier 2 carriers that we interconnect with. And the purpose of that is so that we can bring connectivity to our customers' sites, be it their head offices, satellite offices, or remote offices. And we can connect them in quite easily by using local points of presence, what we call local POPs. And that's really bringing the data as close to the edge as possible to make that real-time interaction as fast as possible and give access to the data center without too much of the public internet becoming involved. So this really is, it's a vast network. It's really beneficial for our customers for us to be able to connect their sites pretty much anywhere in the UK with relative ease. And then just moving on to cover once again our service portfolio. So we break our service offering down into 7 core areas. Forgive me, I know this is a really, really busy slide, but the intention is to demonstrate the breadth and depth of services that SysGroup can offer. And this is what we've managed to build up along the way with the acquisitions and why we've made the strategic acquisitions that we've made in order to make us into that true end-to-end managed IT services provider. So, typical customer engagement will start with a professional services piece of work. It's amazing how many companies don't actually understand the IT that they've got already. They've built it up over a number of years. They know it just kind of works, but they don't know how it hangs together. So we put our professional services team into a customer or into a prospect to really help them understand what their IT looks like. And then from the back of that kind of engagement, we produce a document, which we know as a tech workshop, which then evolves to kind of give a digital transformation journey to our customers in a kind of traffic light fashion, which will give a number of recommendations of where customers can buy services from each of the other arms of the service portfolio that we offer, that takes them on that digital transformation journey and brings their IT into the 21st century, and moves the majority of their IT workloads either into the data center or into the public cloud, where our teams will then look after that service for you. And the customer no longer needs to worry about keeping the lights on. They then have the ability to use their IT skills in-house to sell their own products and services better through the use of technology. So it really is a vast offering that we've got. There isn't much that we can't do for our customers now, with the acquisitions that we've made along the way and the breadth and depth of services that we've acquired. So, SysGroup really is a true end-to-end managed IT service provider, right from connectivity through to end-user support and managing everything that sits in the middle, along with data center services, security, DR, and backup. So just in terms of our, oh, sorry, we've killed the slides. Let's get that back. Thanks, Mark. Just in terms of our sales and marketing strategy, so we are, as I said earlier, focused on the UK mid-market. That's where we see the largest opportunity for SysGroup, both currently and moving forward. And look, we're not a business that is vertical focused, although we do have quite a lot of demonstrated success and some great customer case studies in the verticals that you see listed in the top left-hand corner there, being retail, financial services, insurance, legal, and manufacturing. And when you've got demonstrated success with a customer in an existing vertical, it makes it that little bit easier to prospect the next business, the next target in that sector. When you can tell somebody that you're already doing it for one of their competitors and that you're doing it well, it really helps the sales journey and the sales life cycle to get in and be able to talk to those people to help take their services on board as well. So, I mentioned earlier, we look for typical deployment sizes kind of from 300 users right up to 1,000 users. That's our real sweet spot. We can deploy infrastructure almost at the touch of a button, very, very simplistically, without much investment needed to spin up services for businesses of that size. But we also love to play in the enterprise space as well, because that's where bigger ticket contracts come from. Although obviously, as you can see from the graph, the opportunity starts to decline as you move into enterprise, because there's not as many of them as sits in the mid-market. And we've stated previously in the past, and we'll continue on with this strategy, we don't really play in the SMB space. Once it starts to get below 100 users, contracts are a lot more difficult to deliver because those businesses are a lot needier. They tend not to have anyone that's IT literate within the business. And whilst you're charging the same kind of prices to deliver those services, they're not as profitable to our organization because they lean on us much, much more. And businesses that sit below that SMB space are better suited to sort of smaller, more local companies. And in terms of our marketing strategy, I say it all the time, there's no secret formula or magic wand that can be waved in order to drive demand into this business. We invest significantly into our marketing strategy. Excuse me. And we need to have multiple touch points that are working together in a coherent fashion consistently in order to generate demand. So, we employ a demand generation team. We invest heavily into digital marketing and SEO. We actively work on campaigns all of the time, and that's supported quite heavily by our vendor partners. So we work a lot with the vendors such as Dell and WatchGuard and Mimecast. We'll go out with joint campaigns with both of our logos on there, which again is a really solid thing to do. It shows solidarity to the prospect. And we target customers or prospects to become customers by using all these different means in our marketing department. And those of you that will follow us on social media and LinkedIn and whatnot, you will see that we're very, very active all of the time about posting white papers, current topics that exist within the IT space, such as cyber threats, to get the engagement from people so our salespeople can be plugged in to then start warming those leads up through into contracted sales. And the targets that we like to prospect are the C-suite within business. We like to get involved at the top so the C-suite knows that we are a trusted managed IT service provider, and the information that we present to them can be used at board level to help them with their own digital transformation journeys. And as you can see from the table in the bottom right-hand corner, we tend to tailor the information that we send to each of those roles for their roles and based on the key areas that their roles are responsible for within the business. So when we're talking to a CFO about IT, CFO typically owns risk within the business and their job is to manage risk. So by highlighting risks within the IT platforms that they operate, that usually gets the CFO tuned in and wanting to talk more. So if I come on to the FY21 period and just give a quick highlight reflection on what we've managed to achieve in a full 12 months under government restrictions. Whilst we're 7% down on revenue from the previous period, I think the team has done a fantastic job to help us deliver 18.1 million in revenue. I think it also is testament to the fact that we are a business that is largely underpinned by contracted recurring income. And we've done a great job keeping those customers on board and spending with us and continuing to support them throughout the pandemic, which in turn has helped us generate a higher adjusted EBITDA profit, which is 4% up on the prior period at 2.9 million. So, a fantastic job that the team has done, and we're really, really proud of them. We've managed to re-sign our largest customer during the pandemic. That was back in March this year. That contract accounts for 5.5% of our managed services recurring revenue. That's not revenue as a whole, that's just the managed services piece, but a pretty significant contract. And again, we're drawing out the renewal because I think it really helps support the piece that our services are more relevant than ever before. People need IT in order to transact business. And I think the pandemic has really, really helped bring IT services to the fore, especially managed IT services. Project Fusion, I'll let Martin talk a little bit more about that later. He's been leading that project and done a fantastic job for us throughout the last 12 months. Phase 1 and phase 2 of that project is complete. And just as a quick reminder, Project Fusion is the amalgamation of all of our business systems onto a single pane of glass as a result of all of the different business systems that we've acquired along the way as we've made the acquisitions. As I say, Martin will talk more about that a bit later. And actually the 12-month period under lockdown, we've used it really, really wisely to complete the integration of the acquired businesses, more latterly the H&S and Certus business. So those businesses are now fully integrated into SysGroup in terms of rebranding, customer management, even as far as the offices that came with them have been rebranded into SysGroup as well. And we've actually done the hive ups of those businesses as well. So from a corporate standpoint, we've tidied up our corporate structure, and at the end of the financial year, we hived up all of the trade and assets of both H&S and Certis Technology Group into our main SysGroup trading entity. So that's the highlights. I'm going to hand over to Martin now to take us through the numbers and detail on the performance. So Martin, over to you.
Yeah, thank you. So we've just got a few slides here which I'll run through the FY21 results for you. So just in terms of highlights, as Adam's mentioned, and notwithstanding the fact we have gone down on revenue, as Adam's mentioned, we had a 7% decline. And I will talk about revenue in a little bit more detail on the next slide. I think the key thing to draw out here is we've been able to increase profitability, and we're very pleased to be able to announce that, and in terms of that progression. So you can see from here, our increase in profitability is at adjusted EBITDA level. So against FY20, we've gone up from 2.8 to 2.9. But you can see from the graph that we've actually progressed EBITDA over the last 4 years consistently. And obviously this is part of the SysGroup strategy. We want to grow. And as you've seen on the previous slide, we're looking to get up to 100 million market cap. So that will both be acquisition clearly and organic. But in terms of profitability as well, it's not just adjusted EBITDA. We've got progressive growth on adjusted PBT, on statutory PBT, and we've got growth on profit after tax as well, which is very pleasing to see this year. And again, making the obvious point, that's in a year where we've had 12 months fully of the pandemic challenge. Just in terms of, sorry, just to mention back on that one, just some of the byproducts of the profitability is you've got the small growth on the EPS. The adjusted EPS has gone up from 3.4 to 3.5p, and you can see we've got a small progression on the basic profit per share as well. I will talk about net cash, because I think if there's another element which I think is quite key to draw out this year, as well as the profitability, it's really the quite strong net cash and balance sheet position we've got. So I'll talk about that in a little bit. So I'll just move to the income statement. This, again, for people who are new to SysGroup, I would describe our income statement as fairly straightforward to understand. There's not many strange or complex things going on in here. Revenue, to understand revenue, and if you've looked at our full announcement, you'll see that we have two types of revenue. We have managed services and we have value-added resale. Now, managed services are typically services that we bill to customers on a monthly basis ahead of the service delivery. And these are typically 3-year contracts, and they have 12-month automated extensions at the end of them. So they're very sticky, and we have good long-term customer relationships through these lines. In the value-added resale is more for IT equipment. So what we've found over a number of years is that our customers, as well as wanting us to provide, if you like, a continual delivery of IT support, backup, hosting, etc., they also want us to procure their equipment and license sales. So value-added resale makes up the other element of revenue. Our target business model is 75% managed IT services and 25% value-added resale. So in FY21, we've achieved 79% and 21%, which is therefore slightly ahead of what we wanted. And in terms of gross margin, managed services is typically a higher gross margin of around 60%, as opposed to value-added resale, which typically comes in 20 to 25%. Both are good revenues to have. We want both of them, but we want it within that target model. I'll just mention a couple of things about the revenue declines. I think it's important that you know that. So in terms of managed services, so what we found over the last year was that we did have some customers that clearly had some difficulties themselves, where they took the opportunity of downsizing some of their contracts with us. And obviously they have their own pressures that they're having to deal with. And in terms of value-added resale, particularly in Q1 and Q2 of FY21, so this is going back quite a long way in terms of when COVID was first breaking out and lockdown was starting. A lot of companies were clearly trying to preserve their cash position. Now, H2 in value-added resale did improve, which we're pleased to see, but we're still cautious on value-added resale going forward. We still think we're under some lockdown conditions, and it's not entirely clear how much customers do want to unlock that spend at this time. In terms of overhead control, we've had a very strong year in this area. It's obviously been very important to control these costs. One thing that's been really pleasing for us to see is the last acquisitions we made were in 2019. We made the transformational acquisition of Certus, and we also added in a connectivity company called H&S. And we've seen those acquisition synergies come through in FY21. And how they've come through is in headcount. So the headcount was lowered throughout the year, and that's been done in a managed way. So I'd say we've got an overhead base now going into FY22, which is correctly sized against the revenue and the size we are. We have had a little bit of travel benefit, as you'd imagine. We haven't been moving around a lot in the last 12 months. So we actually want travel clearly to come back in. If we've got travel costs going up, that actually means we've got salespeople on the road, meeting customers, which would be a good thing. So we're expecting that to come back in FY22. We have some capitalisation of project team related time on Project Fusion. And I'll talk a little bit more about Project Fusion, I think, on the cash flow slide, and I'll explain that a little bit in more detail. We've been very pleased to say we've been fully operational throughout FY21, so we've not furloughed any employees. Everyone's been working from home, as many other companies have been, but we've not used any government assistance in any way, and there's no one-off government assistance credits in this income statement. In terms of exceptional items, you can see that that's come down quite significantly. In the prior year, we had the acquisitions, so that's what the larger exceptional costs were. This year, we closed the Bristol office.
Just bear with me.
A legacy H&S office. So we closed that office and vacated it early. And we've also had some early employee departures from the integration of the senior leadership team. I will mention share-based payments, mainly because the cost of share-based payments this year did include what can be perceived as a one-off cost linked to the vesting of some exec LTIP options in July. In terms of FY22 and going forward, we'd expect that to be lower by a couple of £100K. Tax is very well managed. We do have an underlying current tax charge, so we will be paying tax in terms of a cash flow view. The reason why we have a credit is we have deferred tax movements that are on the credit side for amortisation of intangibles and share-based payments. That said, we've got about the most efficient tax number we can have. And in terms of Project Fusion, we have used the R&D tax regime to make those claims as well. So I think tax is in a pretty good position. In terms of the balance sheet in old language, this is a strong balance sheet. You can see that cash has gone up from last year. We've been very strongly cash generative in FY21, which is good to see. Kind of contrary to what you might think is the intuition of the pandemic, where you might have thought that cash collections would prove more difficult. We've actually had probably the best cash collection year we've had. We haven't done anything differently. We've got a credit control team that do a very good job. We've not had bad debts. We've simply had good customers. We've actually got our customer base is very diverse. So in terms of industry sectors, we have 10 or 11% in financial services. We have 10 or 11% in IT, and our exposure to the sectors that have been more affected, like travel, leisure, hospitality, that's around 6%. But even so, those customers in those sectors have been good payers throughout the year, so we're grateful for that. In terms of supply side payments, no change at all in terms of how we pay suppliers. We pay everybody every month. We've not stretched anything. We took the opportunity of deferring our Q1 VAT payment early on in the year when the government gave us the option to do that, but we actually repaid that in full in December 20, so that's fully paid back. We've not had any government support loans. We haven't needed to take any. Bank loans have been repaid throughout the year, on a quarterly basis, and we do have significant headroom on all our covenant ratios, which is good to see. Just I will mention one thing, which you may have seen anyway on RNS, is we had a share buyback transaction in December. We just took the opportunity of buying some shares back for company ownership as treasury shares, and they'll be used in future to settle EMI share options. So a sensible use of money. If we just move to cash flow, I said this was quite a strong position for the company. Our target cash conversion is 80 to 90%. You can see here that we achieved a 95% cash conversion in the year, so slightly ahead. So this was a really good result for us. It's allowed us to achieve at the end of FY21 a net cash position, which you can see in the bottom right corner is 1.9 million. So that's moved up from the 69,000 net debt at the end of last year. So this really is a strong position for the company. In terms of certain items within that cash flow, just to pick out, CapEx, which is for normal PPE, quite naturally that's lower than usual since we've been working from home, so we've not really had much to invest in terms of what we do. The intangible assets cash flow, that is for Project Fusion, so that's a mix of third-party implementation partner supply costs as well as some internal project team costs. Project Fusion, I'll just mention it here because Adam highlighted it earlier, it's been a very, very important project for us. So we've had legacy acquisitions, so we've had duplicate CRMs, duplicate marketing, duplicate service desk ticketing systems. What we've now got is one single platform of CRM, billing, marketing, service desk, project management, people, all on one platform. When I say one platform, I don't mean different systems interconnected. That is literally under one new system, cloud-based system. So that's a huge efficiency for the business. It's an efficiency insofar as it allows our people to service customers better and more efficiently, but it's also a financial efficiency insofar as we've been able to retire quite a lot of old legacy systems and combine it under one. The Project Fusion will continue into FY22, and the key things we'll have in FY22 is reporting BI. We've got a little bit more on the people side of the system, and also we're going to look at our financial account system just to get that up to spec. Once all of that is done, that is really putting us on a platform for the full growth and scale up that we want to do. The acquisitions, we paid out the Certus earnouts in full early in the financial year. So that was after Certus that we bought in Feb 19 fully achieved their earnout. So we're really pleased with that performance. The earnout payment's been made and we've got no contingent consideration left in our balance sheet. So overall good position. We're cash generative, cash is going up. We'd expect net cash to go up throughout FY22. We also have an undrawn bank facility for acquisitions of 3.25 million. So in terms of our ability at this stage to even do smaller level acquisitions, we've actually got the firepower to do that as we stand here today. So I think going into FY22 as we are, we're in a good, healthy financial position. And in terms of coming out of the pandemic when, and I think we're all trying to judge how we're coming out, we're in a good position to take advantage of the market as it recovers. Thank you.
Very good. Just one question that has come in that would be appropriate to answer now. You might not have the answer available, but I'll ask you anyway because it makes sense to do it now. Can we guide to what the capitalisation will be on Fusion in 2022 period? Have we got a forecast on it?
Yeah, I'd expect around 200k on Fusion.
Okay.
In FY22.
Yeah, good. Hopefully that answers the question. Thanks very much, Martin. Cheers. So yeah, moving on beyond the pandemic, whenever that may be, hopefully sooner rather than later, because I'm sure, like me, many of you on this call are fed up of it now. One of the most important things that we did in earlier this year was we announced our 2021 Return to the Office program. So, as I'm sure many of you will remember, we consistently kept our offices closed from the 13th of March 2020, even when the government guided back in August last year that it was safe to go back to the office and buy a coffee from your local coffee shop to help restart the economy. We maintained a position of keeping everything closed in order to maintain stability for our teams. But following the successful rollout of the vaccine in the UK, certainly, we thought it was important for us as a business to make our office space available for people, our team members, to utilize once again. Because I don't think we should downplay the fact that it's really important for people to come together to innovate and collaborate. I'm sure many of us and many tech leaders came out early on in the pandemic to say, we'll never go to offices again and everybody will homework. And I think that was the novelty factor. I too was guilty of that and wondering whether we would need offices moving forward. But actually, as you move throughout the course of the pandemic and you start to understand the impacts of it, it's absolutely essential for businesses to continue to have hubs for people to come and get together and, as I say, innovate and collaborate. So 24th of May this year, we made the offices available, albeit on a downsized footprint. People can book desks. They need to fill in health declarations and take COVID tests so that we can limit the spread and the potential risk as much as possible to our business. But it is great to see that we've got people coming back into the office and once again interacting and collaborating, all to help towards the future success of our business. One of the other things, we took the opportunity to refurb the Newport office. So we spent some money doing that place up. So that was the building that we acquired with the SYSGROUP Technology Group acquisition. The place had been very heavily underinvested, and it was only when Martin and I visited earlier this year and the place was completely empty that you could really see that it was dated and it was tired. So we spent some cash. We've ripped the place out. We've made it a SysGroup home. We've got the SysGroup values everywhere, the SysGroup branding, and we've made it the SysGroup way. So actually, when we do get that full return to the office, whenever that may be, it will be a fantastic place for our team members to come back and work. And, again, it's something else that's not to be underestimated. If you provide a fantastic working environment for your team to come and work in, they tend to want to spend longer there. They want to be there. They don't want to be, they're not in a rush to get home at 5 o'clock. So it's really important that we keep the offices up to date and modern and a really great place to work. Now, I mentioned very early on at the start of this presentation that we've made a bit of a bold move and we've opened a new office during lockdown. So we decided that we were going to open an office in central Manchester. And the reasons for doing so is one of the things that we've never had as a northern presence in this business is a real sales and marketing hub where we can drive the energy that sales and marketing teams are used to, kind of that high pressure sales environment with the targets on wall boards and whatnot, and the real collaboration between sales and marketing on campaign driven activity. We've never really had that. So we decided to do it in Manchester. And you may ask, well, why would you spend more money on another office when you've got one 30 miles down the road in Liverpool? But the answer to that is 4 of our largest competitors are based up here in Manchester, and we want to be able to attract some of their world-class talent from them and bring those guys on board into SysGroup. So we've built this brilliant office here. It's got real flexible ways of working. It's not just an office with desks. We expect when people come here, they will see the place and they really will want to work here. We've got a lounge area with big screens that you can share your screen to, so people can collaborate and innovate together. It's not going to happen overnight. We only got the keys 3 or 4 weeks ago, I would say, Martin. We're recruiting people to come into this office at the moment. Some of the key hires have been made already and will take up office in July this year. And then we'll start to recruit the workforce that's going to come in here. But I think over the next 12 months, we'll put about 8 to 10 heads in this office, purely sales and marketing focused. And that will really start to help in future periods us drive that top line organic growth as we concentrate on campaign driven sales activity. So it's a really good move for us. It's not a huge gamble. It's not cost us a great deal of money to do it. I'm sure you can imagine taking a lease on a building during a pandemic when everybody's moving out of office space is actually a lot cheaper than what you think it would be under normal market conditions. So we've kind of seized the opportunity. And I think in 12 months' time, people that wait till it's safer to do so will be behind the curve. And I'm expecting with the move that we've made here at SysGroup, we should be ahead of the curve and ready to prosecute that market opportunity as and when confidence is restored in the wider market space and people are ready to spend on IT again. That plays on into the point that I'm talking about on focusing on hiring world-class talent. We're all about employing the best here. This is why we build these fantastic offices and we make them great places where people want to come to work. As I say, office working has been off the cards for the last 12, 13 months. But as I say, we're slowly reintroducing that into our workforce. And people are taking us up on the ability to be able to come back to the office and have that social life that people have at work once again. And as more and more companies start to do that, I think we'll start to see more and more activity drive forward in the market. So look, in summary, FY21, whilst it's been a tough year for everybody, not just SysGroup, I think our team has done a fantastic job and demonstrated our resilience, certainly to the pandemic, with a turnout of 18.1 million. I mean, I'm more than delighted with it. I've spoke to a number of the institutions over the last 24 hours who are really, really pleased with the performance of the business. And again, the increased adjusted EBITDA of 2.91 million, really demonstrating the synergies that can come through from acquisitions once we've made them and fully integrated them. As I always say, the proof is in the pudding with 95% operational cash conversion. Plenty of people can deliver a big adjusted EBITDA number, but whether that turns into cash or not is a different matter. But we're really demonstrating that with the huge increase in our cash balance and actually moving from a net debt position to a significant net cash position. I think the business is really demonstrating its resilience throughout COVID. And what it's capable of delivering in the future as market conditions return. So, that leads into, we've got a robust business model. I think our products and services are really, really relevant. And as we move out of the pandemic, and IT spend becomes a huge agenda item on the agendas of most board meetings for most businesses, managed IT services will really, really come to fruition and should start to accelerate as that confidence returns. As I say, Martin and his team have done a fantastic job with getting phases 1 and 2 of Project Fusion delivered. Again, that's really enhanced our capabilities to make future acquisitions and integrate them with relative ease. We've got that platform now that is ready to be built upon. And we can migrate customer bases and the ancillary services that go along with them into our own single pane of glass system, which gives us great visibility of the business and really helps us identify sales opportunity moving forward. And, you know, it's really important that we state, whilst we've not made an acquisition for 2 years now, strategic acquisitions are still 100% part of our stated strategy, and we will continue to make acquisitions. But the key to note there is we will continue to make the right acquisitions. I think I said earlier on in the presentation, there is a number of businesses that we looked at throughout the period of lockdown, but they just weren't the right deals for us to do. And shareholders certainly wouldn't have thanked us for doing them. So we've remained well disciplined on our acquisition strategy. We've not done a deal for doing a deal's sake, and we won't do, but we will continue to work hard in order to find quality assets and bring them into the SysGroup family. So that concludes the presentation, and I think we can move on to Q&A.
That's brilliant. Adam, Martin, thank you once again for updating investors. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback. Adam, Martin, obviously investors had the ability to pre-submit questions. We received 3, so perhaps we could start off the Q&A with those. The first one reads as follows: can you describe the sales process from a client being interested to a client being onboarded and invoiced, and the typical timeframes involved?
Yeah, sure. Thanks, Mark. So I'll take that one. Could be quite a wide answer. All depends on the size of the engagement and what we'll be delivering for the customer. So typical sales life cycle used to be 3 to 6 months. It's more like 6 to 9 now. On what would be a true managed services deal, we're going to be providing the connectivity. We're going to be doing a migration to the data center. We're going to be taking over the Office 365 platform. We're going to be looking after the security. There is a number of stages to go through there in order to gain commitment. But if you go for something maybe a bit smaller, where people are just looking for, let's say, some managed hosting in the data center, typical sales life cycle from introduction through to invoice would typically be about 3 months.
That's great. Thank you very much indeed. The next question we received reads as follows: the customer engagement survey, which was detailed in the 2020 annual report, suggested that you were going to dig deeper to determine levels of customer satisfaction. What areas of improvement did you find, and has this now been implemented?
Yeah, okay, so it's a good question, and it was all about building on our customer satisfaction. So as I said back at the start of the presentation, our KPI is a minimum of 97% customer satisfaction, which we consistently have beaten in the last 12 months, which is great for us. But we did start to talk to the customers in more detail about what we can do better and what we can do more of. However, we've actually not got the results back from it that we would like. And what I mean by that, I don't mean that we got a load of bad results. I mean, we've not got the engagement that we wanted. People have been so focused on running their own businesses in the pandemic, they've not really had time to give survey feedback and really interact with us. But one of the things that we did get pretty early on is around account management and how different levels of account management would work better for our customers. And people wanted more of a single point of contact within the business, which doesn't always work in managed services because there's lots of different touch points within a customer, and we need lots of different skill sets within our own business to manage our customers. But one of the things that we have ramped up as a result of the very early findings, and it's going to take some time, and it's a continuing process that we're running through, is we've ramped up more strategic account management into the customer base.
That's great. Thank you, Adam. I think you've touched on this in the presentation, so if there is anything to add, please feel free. The question reads as follows: can you provide an update on the project to consolidate the legacy network assets and the expected operational cost synergies? Perhaps if there's anything you can add to that.
a follow on from something that I think we said back at the full year last year. We were looking to embark upon a project of integrating the physical network assets within our data centers for largely what consisted around the hub network services network footprint. That project has been delayed in its entirety purely because we can't get into data centers. We can only send people into data centers still to this day for what we call priority one service issues. So it's technically impossible to embark upon that project. And until we come out of lockdown and the data center providers are prepared to let us in on a more ad hoc basis, we can't even start on that project.
Thanks ever so much, Adam. Well, look, that takes care of those questions that pre-submitted. If I could ask you just to open up the Q&A tab on the right-hand corner of your screen, you'll see that there's a number of questions that are in there from investors. If I could ask you, please, if you wouldn't mind reading out the questions and where appropriate, giving a response, and I'll pick up from you at the end.
Yeah, sure. Thanks, Mark. So the first one we've got in here, have there been any changes in key people during the year? Yeah, we have. We've made a couple of changes to the senior leadership team as part of the integration of the businesses. So obviously, every time you buy a business, you get a new senior leadership team with it. And you can't always accommodate everybody. Probably one of the biggest changes we've made is around the marketing strategy of the business. We've put a new head of marketing in place. We've amalgamated two roles certainly into one around pre-sales and consultancy. That's come into one role on the senior leadership team. And we also brought in a new CTO in January of this year, I think. That's probably about it in terms of key changes, yeah. So the next one, as we come out of COVID, what is the plan with regards to M&A? I guess this will be a key driver to your strategy of getting to 100 million market cap. What areas are key? What size of transaction? And are there any new territories you would like to be in? That's definitely 5 or 6 questions in one, so I'll do my best. Look, M&A, as I said earlier, is still very much part of the stated strategy, and absolutely is a key part of getting us to the £100 million market cap. In terms of size of deal, it's difficult for me to say. You know, it depends what's out there. We're not frightened to make big transformational deals. We've done it in the past. We did it with SYSGROUP. We doubled the size of the business overnight. But we're also very much up for doing strategic bolt-on acquisitions that we can very easily finance with the existing firepower that we've got. In terms of territories, you could almost argue territories don't really matter anymore. You can support anybody from anywhere. We've demonstrated that over the last 12 months. But I suppose it's obvious we don't have a presence in the Northeast or in Scotland. You know, whether there's any targets available for us to acquire in those regions, we'll have to wait and see as time goes on. So hopefully that covers that question.
I think it's might as well link it to Bob L's question as well, just a bit further down. So I think Bob L is asking about, can you please give us details of your acquisition strategy? Does it require a strong share price? To what extent are you considering debt to finance acquisitions? How do funding options impact the size of acquisitions that you are targeting? So one simple answer to that is we will consider debt in terms of funding for acquisitions. This is obviously linked to what size of acquisition we're looking at. So you've probably seen from the slides already that for a bolt-on acquisition, we've got an undrawn debt facility available and we've got existing cash. So to some extent, we've got the ability to do a small acquisition. But if there was something larger, would we consider debt funding? Yeah, absolutely. But mine and Adam's attitude to debt is we don't want to go racy and going thin on headroom on leverage. We'll keep it sensible within the leverage to what we think we can manage.
Yeah, the max sort of leverage that in a capital markets business of this size is 1.5 times EBITDA. You wouldn't want to start to leverage more than that if you still want to be able to put your head on the pillow at night. But yeah, debt is easily got the capability to service some debt. You know, as you can see, we're in a net cash position. So yeah, we can finance deals through debt and through equity if needs be. Interesting question from Neil. I don't think at the H1 figures there was an expectation of an 11% decline in managed IT services for the second half of the year. What sectors of yours have been affected most? Have you experienced any increase in competition? Or have companies been taking functions in-house? Has the sales force now been able to get out on the road? You know, I'm not sure about the 11% figure. I'm not sure how you've calculated that, but I think one of the things that wasn't expected at the second half, or certainly when we announced the second half results, was another full-blown lockdown. Back at that point in November, I think if you remember, we were in a tier system, and the government was tackling the COVID pandemic by means of more localized lockdowns, which were more a lockdown was the closing of bars and restaurants, as opposed to let's close everything and stay indoors. So, you know, moving into January, mobilizing our sales team was impossible. People meeting was impossible. You're back to the Microsoft Teams and Zoom methods of meeting people that everybody is now extremely fatigued with. And again, to come on to the point about is the sales force now out on the road? No, it's not. The sales force is far from out on the road, purely because we've got a primary responsibility to keep our people safe and protected from COVID, and we as a business have got to do our bit to ensure, number of cases are rising again, that we don't become part of the problem until the vaccination program is fully in effect, and the government guidance is to get people out and to meet again in a business setting, which currently it isn't. We're actually a little bit ahead of the government guidance with making our own offices available, but we've done that in such a fashion whereby we're using a bubble and we're testing everybody. And we're using health declarations to keep people safe. As much as we'd love to mobilize the sales force and as much as the sales force would like to be mobilized, it's just not possible to do it at the moment. And people don't want you turning up at their offices. The odd one-to-one meeting between senior people might be happening. But I think in terms of general workforce, if we were a business that was seen to be promoting such activity right now, I don't think that would go down too well for us at all. In terms of the sectors that have been most affected, I don't think we've seen it in anything specific.
No, there's no specific sector.
Yeah.
I mean, we can talk about customers that have been affected themselves, but that's within that 6% of the travel, hospitality and leisure. So we've got some smaller hotels and a couple of gyms, but they're coming out now and they've paid throughout. With a little bit of financial support along the way, but they've come out the other side of that and paid their way. So no particular sector or no particular pain.
Yeah, okay. So look, I'm conscious of time. I'm going to take one more from David. Can you guide more specifically on the overhead increase attached to the sales and marketing push, e.g. lease and new bodies, etc.? I mean, look, I alluded to it earlier on. It's not costing a huge amount of money. As I said, leased office space is cheap at the moment. I'm not going to go into the details of what that's costing at this stage, but in terms of introducing new people into the sales force, the 12-month cost fully complemented will be around about 225,000 a year. But you've got to bear in mind that's going to come in on a ramp up, because you're not going to hire everybody on day one. They're not all going to come in this financial year, and you'll actually start to get people to pay for themselves before you bring others in. So, it's not like we're trying to sink the EBITDA of the business into an idea that might not pay off for us. We're investing very, very sensibly into a project that, if it works out well for us, will pay huge dividends. So hopefully that answers your question. And I think that's all we've got time for.
Adam, thank you very much indeed. And thank you to all the investors also that have taken the time to submit the questions both ahead of today's event and during the event. And any questions that we haven't got round to, I'll make available, obviously, to the company afterwards. Adam, Martin, I know investor feedback is important, so I'll shortly redirect investors to provide you feedback. But perhaps I could just hand back to you for a few closing comments before doing so.
Yeah, I'd just like to take the time to thank everybody for taking their time to come and join us and listen to us once again. And we look forward to speaking to you again at the half year. Stay safe.
Thanks very much indeed, both to Adam and to Martin. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SYSGROUP PLC, I would like to thank you for attending today's presentation. That now concludes today's session, and good morning to you all.